Right.
Let's bring in Jonathan Krinsky now. He's a chief market technician. Baycrest joining us once again. Thank you for joining us. What do you make of the selling? What do the technicals tell you about where we may be going from here?
Yes, I think I agree a little bit with both viewpoints there. I mean, let's put things in perspective. First of all, Nasdaq 100, kind of the crux of the sell-off, mega cap tech, down about 5.5% from the highs. If we go back to the period that you guys were discussing when rates last had a bit of a move up in February and March, Nasdaq 100 was down around 11%. So we're only we've only seen about half the move down that we saw back then. And if you think about what worked during that time period, as Jim was highlighting, it was the cyclicals, it was the value play, and value has underperformed growth by about 15% from those spring highs. So we actually think that this move in rates is kind of the catalyst or the trigger to kind of see a rotation back. And sometimes it's market direction that matters, and sometimes it's market selection that matters. And I think right now it is market selection. You mentioned some of the reversals in the banks, but there's still a lot of regional banks that are green on the day. So we think this is the start of that rotation back into the cyclical. Small caps have done literally nothing since March, and the S&P's got about 10% to its March highs. So, I think there's plenty of runway for this rotation to persist, and that's going to mean small cap should outperform. It's going to mean regional banks and energy and materials and all the things you guys are talking about are going to outperform. I think ultimately that will resolve itself in an absolute move higher for the Russell 2000, meaning we'll finally break this trading range we've been in for 6 months to the upside. But clearly in the near term, the weakness we're seeing in a lot of the big mega cap names is having an impact across the entire market right now.
What's ultimately going to happen with that, though? If you have the biggest stocks in the market underperform, as you suggest they're about to do, or they're in the midst of, that has to be an overall negative unless you think that the rotation is going to be so powerful and so big that it's going to carry the weight that you lose from the largest stocks.
Yeah, well, let's go back to that February-March playbook. We had the Nasdaq 100 down about 11% in that drawdown. Meanwhile, the regional banks from early February into mid-March were up 35%. So they didn't even shrug at that entire tech sell-off. And that's the environment we're in, and that rates are so powerful to the intermarket correlations that you can have a situation where, mega cap tech does its thing, and that's gonna, let's be clear, FANG is going to drive the S&P 500. So if FANG goes lower, S&P 500 is going lower. But, let's not forget there were areas of the market and big areas of the market, regional banks, that were up massively in that drawdown. So I think, the fact that we've gone sideways on regional banks since March, April, and we have rates. And it's not just rates in the U.S. We have global rates testing or breaking out above their spring highs. We're talking, from Japan to Germany to all over Europe. So it's a global rate phenomena. I think that'll benefit some of the cyclical areas of the market. And again, on a day-to-day basis, sure, it's going to get dragged around a bit by the S&P 500, but ultimately we think cyclicals should start to outperform again as we head into the fourth quarter.
Jonathan Krinsky, I appreciate you coming to the phone. Big day in the market. We'll talk to you soon.